Good day, ladies and gentlemen, and welcome to our class on how to use Gann Fans. Now, over the last couple months, I've gotten a lot of emails asking for a simple basic class on Gann Fans. So that's what we're going to do today. So first, let's talk about Gann theory. Gann theory was a concept developed by William Gann in the 1900s. He was a successful trader and believed that stock prices change with an angle. Okay, now remember, the 1900s. That was a while back. There was no online trading. There was no internet. The markets moved a lot slower, and really the only kind of trading out there was stocks or maybe some odd commodities. The world has changed drastically with the internet and online trading, and a lot of people have found that Gann Fans transition very well to Forex trading. Now, as an asset can move in different angles, he noticed that price changes were related to natural geometric shapes and predicted future price movements in relation to time. Therefore, Gann theory is also known as Gann angle theory. Gann trading strategies can still be used and, if applied correctly, can predict the movement of an asset up to 90% accuracy. William Gann believed that the market follows a natural time cycle. And one of the things that makes Gann theory different is trend lines, even Fibonacci, your standard eyeball support and resistance lines, do not involve time elements. Okay? Where Gann theory involved time. His theory was based upon natural geometric shapes and ancient mathematics. Gann theory states that the patterns and angles of an asset on the market can be used as a predictor for a price future movement. Now, Gann developed several unique techniques for analyzing price charts. Gann believes that every angle and pattern has a unique characteristic that can be used to predict price action. Gann's charts use the same time and price element. Now, I'm going to give you going to qualify something here. I don't use Gann Fans at all. I don't use that much technical analysis, and I'm a firm believer in support and resistance by eyeballing, and I'm a firm believer in Fibonacci. I use price action and what's on my charts. Okay, Gann angles and Gann theory was always a little bit out there for me, but lots of people use it and believe in it. Okay. Now, for Gann angles, we use what he called Rice run of 1 times 1. Or, I'm sorry, price times run. Is 1 times 1 will always equal 45-degree angles. Gann states that the price and time are the best when rise or fall at a 45-degree angle relative to each other. So in other words, each one of these Gann angles you see have a 45-degree position to the next. To draw Gann angles at different angles, you need to have a significant bottom or top. If price are above the trend line, it is a bullish market. A bear market if they are below. Gann believed that the 1 times 1 trend line provides major support and resistance in an uptrend, and that when it is broken, signals a major reversal of the trend. So Gann identified 9 angles that were most significant, and the most significant is the 1 times 1. Then we have 1 times 8, which is 82.5 degrees, 1 times 4, which is 75 degrees, 1 times 1, which is 71, 1 times 2, 1 times 1, and then 2 times 1, 3 times 1, 4 times 1, all the way down to 8 times 1, which is a 7.5 degree. And these are in relative position to the previous angle. So as you can see, all of these red lines are the angular lines based on the Gann angles. Gann noted that all angles provide support and resistance levels based on the trend. Strong support is provided by the 1 times 1. And it is the major signal of reversal when the price begins to fall below the 1 times 1 angled trend line. Now you can quickly grasp the basics of the study with the help of Gann angles intraday trading using a Gann theory. So let's look at a simple example to understand the concept. If the market is an upward trend and does not break, it means that the market will remain in an uptrend until the angle trend line breaks. Gann theory can be used or useful to traders in order to make good returns on the market. There are many Gann theory books that you can find online or offline. The books can be used to help you trade. When you have provided basic concept regarding the application of the Gann theory. Okay. Now, what's the application? Patterns can be studied using both price theory and Gann time. So 1. Price study. With the help of Gann angles, you can track the price movement of an asset. The pivotal levels are used to predict the asset's future price movement. The asset's price can also be determined by the resistance or the support levels. 2, and here's the concept that gets a little screwy. Gann's time study model gives traders an idea of when the asset's value can reverse. And it's not based on a price, it's based on a time. It's necessary to analyze historic data and determine the asset's current price. Gann's time study theory allows traders to estimate when the price can fall. To estimate this, it is necessary to examine the price movements over different periods. And 3 is pattern study. The use of patterns can help you find an asset's movements and investors' activities. The pattern study covers the trends and patterns that indicate the reversal of an asset's movements. Forex traders who are new to Gann theory often ask which Gann angles are most effective in predicting price time movements. The answer depends on the particular market. Gann angles and indicators are counterintuitive to the proponents of an efficient market hypothesis, which holds that past price movements cannot accurately predict future price moves. In fact, Gann theory offers winning predictive tools for traders to experience in their uses. Now, most indicators help you analyze where price is. They analyze historic price. Very few indicators actually predict future price movement. Gann theory is one of those, or Gann angles, is one thing that predicts what's going to happen in the future. A crystal ball, you say. In short, the price works its current relative weakness or strength according to the calculated angles above and below. As an example, if a currency price is observed to be above the 2 times 1 angle, this is far more bullish sign than if the price were merely above the 1.1 angle. The short explanation about why Gann theory works is that when uptrending prices reverse and then breach and fall below the nearby ascending angles, those prices will usually then drop down to the next closest angle below. Likewise, when downtrending markets reverse direction and then breach upward through the nearby descending angles, those prices will tend to continue upward and achieve a price level of the next closest angle to them. Okay. I've not used Gann angles enough in my life to really rely on them. I mean, to me, this is a lot of words of malarkey, but people that use them regularly swear by them. Okay. Just as I swear by my support and resistance levels or my triangles, but it's because I use them all the time that I've grown accustomed to them and I know how they react. Now, the key advantage of using Gann angles is the fact that past, present, and future are all embodied together within these angles. Notwithstanding this, Gann angles are usually used to predict future support and resistance, the strength of price movement, and the timing of bottoms and tops, and the changes of trends. Gann angles are the basis for valuable tools that offer predictive power, especially when used in conjunction with other timing indicators. At the same time, mechanical trading systems must be fine-tuned in order to determine the best Gann angles to be used in particular Forex markets, especially with regards to volatility and price scale. When the power of these simple angles is leveraged by knowledgeable traders, there are plenty of gains to be made using Ganns. So how do we use Gann trading strategy? This trading strategy was developed by Gann based on some assumptions. 1. Market movements are governed by time cycles. 2. Markets are geometric in their design and their movement. And 3. A market is only affected by price, time, and range. Okay. Again, this makes sense to a lot of people. It's like hard for me to grasp. Traders should remember that the market moves in different angles. These angles will remain the same. These angles can only be rotated. An asset can move from one angle to the next. This is the rule of all angles. This rule states that an asset moves from one angle to another once it has achieved that angle. Most commonly, Gann angles are used to locate support and resistance lines. It is called a break when support is broken. This indicates that the price will drop. It breaks out, on the other hand. This means that the resistance is broken and the price will move down. Okay? To me, either way is a break above or a break below. Once a trader can set his time frame, he or she will draw the Gann angles on the chart. These angles will be based on 1, 1, 2, 1, 3, 1, 3, 1, and so on. Today, our modern charts, our HTML and Java chart, do this automatically for you. You open up the indicators as Gann Fan, but you still have to find your point where you're going to lay them on. And then when you give it its starting point by just dotting it on your chart, it will automatically lay these Gann angles out for you. Now, if the asset is bearish, the 50% retracement level is an important resistance level. These angles are important support and resistance levels for assets that have been trading at different angles. Okay, and these areas are called price clusters. Gann angles at different levels, you need to have a significant top and bottom. If prices are above the trend line, it is a bullish market. A bear market if they are below. Gann believed that the 1.1 or 1 times 1 trade line provides major support and resistance in an uptrend, and that when it is broken signals a major reversal. The use of patterns can help you find or define an asset's movements and investor activity. The pattern study covers the trends and patterns that indicate the reversal of movement. Gann theory states that the price patterns and angles of an asset on the market can be used as a predictor for the price's future movements. Gann theory is an important technical analysis tool that traders use. These 9 special numbers, these 9 angles, are used to set stop losses and target prices also. These targets can be calculated on a variety of websites as well as on your stop loss. These targets can be bullish or bearish. A trader must decide which target to pursue. If used correctly, Gann trading strategies using Gann indicators can lead to many successful trades. Gann theory is only successful when applied correctly, and this requires time and experience. Okay. Laying your Gann fans on your chart becomes ultimately important, and there is no right or wrong. It's for you to define the point in which that angle or that trend is started. The theory will help you analyze the markets and predict future price movements. It is crucial to always backtest your strategy and put a stop loss on every trade. So today we covered the basics of Ganns. Okay, you understand what they are, but it's just a matter of practice and interpretation. That I can't help you with. That's up to you to do. So thank you very much for joining us, and watch for this week. We're going to upload a new video on Elliott wave cycles with an in-depth explanation how to interpret these cycles. So thank you for joining us, and have a great trading weekend.